Ladies and gentlemen, good day and welcome to the HFCL Ltd Q4 FY24 earnings conference call hosted by ICICI Securities. Before we begin, I would also like to read the disclaimer statement. Statement made during this call may be forward-looking in nature based on management's current beliefs and expectations. They must be viewed in relation to the risks that HFCL's business faces that could cause its future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. Investors are therefore requested to check the information independently before making any investments or other decisions. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Mohit Lohia from ICICI Securities. Thank you, and over to you, sir.
Yeah, hi, good evening everyone. Thank you, Neha. Thank you for joining us today for Q4 FY24 earnings call of HFCL Ltd. First of all, I would like to thank management for giving us opportunity to host the call. From the management side, we have Mr. Mahendra Nahata, Chairman and Managing Director, Mr. V.R. Jain, Chief Financial Officer, Mr. Manoj Ved, Company Secretary, and Mr. Amit Agarwal, Head Investor Relations. So without further delay, I would now like to hand over call to Mr. Mahendra Nahata for opening remarks. Thank you, and over to you, sir.
Thank you so much, Mohit, and thanks everybody for joining our call. Your time is very valuable, and I am thankful that you all could join our quarterly call for Q4 of financial year 2024 as scheduled. I am delighted to welcome you all to HFCL's this earnings call for the fourth quarter for the year ended financial year 2024. I trust that you got a chance to go through our financial results, press release, and investor presentation, which are available on the website of the company and also on the website of stock exchanges. Well, friends, it is a matter of great satisfaction that despite the tough global macro environment, Indian economy is having robust growth, and India is poised to become the third largest economy by 2027 as per IMF, surpassing Japan and Germany. During the interim budget of 2024, the Union Finance Minister underscored the forthcoming 5 years as a period poised for unparalleled development, aligning with vision of Viksit Bharat at 2047. She highlighted that technology alongside the telecom sector will play a pivotal role in India's transformative journey. The Indian telecom sector is undergoing a transformative change and will continue to on its expansion trajectory, fueled by liberal government policies, proactive government initiatives focused on national priorities, including BharatNet Phase 3 program and PLI schemes. Government's initiative of promoting semiconductor manufacturing in India will also fuel long-term growth of telecom sectors. Hyper-scaling of data centers, increased smartphone usage, strong customer demand for high-speed internet connectivity, and 5G network expansion will further fuel growth of the telecom sector. The economic impact of 5G in India's GDP could reach up to $450 billion by 2040, according to Deloitte Technologies Media and Telecommunication Prediction Report 2023. Financial year 24 has indeed proven to be pivotal year for HFCL. Our strategic investments in research and development have yielded significant returns, resulting in the introduction of a comprehensive range of 5G connectivity solutions and products tailored specifically for telcos and enterprises, both in India and across global markets. Led by innovation in financial year 2024, HFCL successfully launched the first made in India 5G fixed wireless access customer premises equipment portfolio. Then 1 Gbps unlicensed band radio, also IP MPLS routers, and introduced innovative 1728 high fiber intermittently bonded ribbon cable. Our 5G fixed wireless access equipment gives market-leading performance in delivering higher throughput. We have introduced hot swappability features in our routers, making them rugged for use in rural areas in projects like BharatNet. On overall, I view the result of our R&D team has achieved is a milestone showing we have talent and capability to deliver latest technology products. We believe demand for 5G fixed wireless access customer premises equipment is at an inflection point and has become an important use case for 5G monetization both in India and globally. With 5G network rollouts continuing its dream run, monetization has been a key focus area for operators. Industry reports indicate FWA connections worldwide are projected to reach to 350 million by the end of 2029. As the transition to 5G continues and newer technological standards gain traction, telcos are projected to invest $342 billion in their networks in 2027 alone, as per PwC report. Every country has different types of specifications for fixed wireless access, customer premises equipment. Our company has been able to develop different variants and types of this equipment and is uniquely positioned to manufacture and supply both for India and international markets. HFCL has already received orders for 6 lakh units of this equipment. One of the landmark success stories of HFCL's R&D efforts has been design and manufacture of point-to-point unlicensed band radios. We have achieved record market share for this product in India. More than 5 lakhs of these radios have already been supplied by HFCL and are working to the full satisfaction of telecom operators for network backhaul and enterprise connectivity. HFCL is not only the largest supplier of these radios in India, but also can be counted among the leading suppliers around the globe. We are continuously receiving strong feedback from our customers for its low power consumption and zero spectrum cost. It is also worthwhile to mention that through its R&D and collaborative efforts, HFCL has created full solution of enterprise networking products. These products include Wi-Fi access points, routers, switches, backhaul radios, and network management system. Having established its name in telecom service providers market, HFCL with its enterprise product range is now aggressively moving into enterprise market of telecom networking products. Distributors and channel partners are being appointed throughout the country to reach to wide spectrum of enterprise customers, both in government and private sectors. Opening of this new customer segment will provide higher sustainability to our revenue. With the introduction of new products and markets, our revenue from telecom equipment segment is expected to rise substantially. We expect that the revenue from this segment during financial year 25 will reach to approximately rupees 2,000 crores from rupees 150 crores only in the year financial year 24. Driving growth through innovation is fundamental trend in digital economy. These trends are bringing very large opportunities for innovation and growth, not only for HFCL but for the entire ecosystem. Similarly, the optical fiber cable market remains a significant opportunity both in India and globally, driven by high-speed internet penetration, 5G network expansion, growth in data centers, BharatNet Phase 3, demand for fiber to home and global opportunity in key markets coupled by government policies. Development and manufacture of 1728 fiber-based optical fiber cable will open new market opportunity for sale to hyperscale data centers. In alignment with our strategy of expanding capacities and geographical access, HFCL has announced the setting up of an optical fiber cable manufacturing plant in Poland to address the increasing optical fiber cable demand in European markets. Mirroring the trends in the Indian optical fiber cable market, the European countries are also on a significant digitization drive as national priority. Committed to meet this growing demand and contribute to Europe's digital future, HFCL has committed an initial investment up to Euro 15.9 million that is rupees 144 crores, for its all-in optical fiber cable manufacturing plant with an initial annual capacity of 3.25 million fiber kilometers, which is further scalable to 7 million fiber kilometers per annum capacity. Our fiber and fiber optic cable manufacturing facilities in India are producing world-class cable and fiber. Our fiber manufacturing plant has set new standards of productivity. One of the most anticipated opportunities on the horizon is government's ambitious BharatNet Phase 3 project, under which BSNL has already floated approximately 60,000 crore tender for capex to be incurred in next 3 years, followed by additional O&M opportunity worth 40,000 crores over a period of 10 years. BSNL's BharatNet Phase 3 project tender presents a huge opportunity to HFCL, as it will strengthen the demand for optical fiber cables, telecom networking products, system integration services, and annuity revenue through O&M, all of which are in alignment with HFCL's core strengths. HFCL is uniquely positioned to offer end-to-end solutions that meet BharatNet's stringent requirements. We foresee good prospects for us, given our vertically and horizontally integrated manufacturing capabilities in optical fiber cable, its accessories, telecom equipment, and SFPS through one of our group company, coupled with vast experience of laying more than 2 lakh kilometers of optical fiber cable for various telecom operators. We are optimistically looking forward to securing a substantial pie of this opportunity. Export of products is going to be our cornerstone for increasing revenue. HFCL is already exporting its manufactured fiber optic cable to more than 40 countries. With its own designed network connectivity solutions, including 5G networking solutions, HFCL is now poised to start export of these products to a number of countries. Capability to customize the products to customers' requirement and also low-cost base provides positive outlook for HFCL. With the release of every new version of software tuned to customers' requirement, we improve our product performance. I think these opportunities are just the tip of the iceberg, and there are far more opportunities to come. We are confident of durability of demand drivers of industry and our own capability to take advantage of same for increasing our sales and market share. Driven by vision to fortify national security and contribute to India's defense sector, HFCL envisions significant opportunity for itself in defense sector with innovation and tie-up with leading international companies. India accounts for 3.7% of global military spending, making it the third largest military spender in the world after US and China. This presents a significant market opportunity to HFCL. In alignment with government's Make in India policy, HFCL has already developed defense products like electronic fuses, high-capacity radio relay, and thermal weapon sights, all of which have good demand in Indian and international market. HFCL, at its 90% owned subsidiary Radif, has developed state-of-the-art ground surveillance radars, which is an important component of modern surveillance systems. This radar designed by Radif is vast improvement in technology over the current generation of radars being used in India. Our ongoing R&D initiatives extend to a diverse range of radar technologies, including development of drone detection radars, Doppler weather radars, LTE-based passive radars, fog and foliage penetration radars, coastal surveillance radars, and avalanche detection radars. We have also successfully cleared the user trial readiness review for BMP-2 armament upgrade project of the Indian Army, further demonstrating our commitment to meeting the defense sector's requirements. This will lead to more opportunities and prospects for HFCL in defense sector. We are also exploring opportunities for development of more products in defense sector, and we are confident that we will be able to further grow and contribute to India's defense sector with our own development and new alliances. I am of strong belief But in the current year, we will have good growth in defense sector and it will achieve its escape velocity. During FY24, the company added an incremental order book of rupees 3,725 crores, comprising orders worth more than 1,500 crores and system integration orders worth 2,225 crores. Our product business has secured a purchase order of rupees 623 crores for the supply of indigenously manufactured 5G networking equipment. This is the first such order for 5G networking equipment placed on any Indian company by any telecom service provider. This strategic win is a testimony of HFCL vision of designing and manufacturing high technology telecom equipment in India. HFCL has been investing in building portfolio of 5G networking equipment which transforms telco's access and transport and last mile networking requirements. HFCL also secured a purchase order worth 141 crores from BSNL to supply indigenously designed and developed unlicensed band radios in 5 GHz frequency band and 1 Gbps capacity. This landmark deal aims to build their 4G network infrastructure, ensuring cost efficiency by minimizing equipment expenses and eliminating hefty spectrum usage charges. This significant win solidifies HFCL position as leader in indigenous 4G and 5G backhauling solutions. System integration order book comes from prestigious order valued at 1,127 crores from Bharat Sanchar Nigam Limited to transform the optical transport network infrastructure across BSNL's pan-India network and position the telco for the future in anticipation of 5G services. HFCL also secured rupees 1,500 crore orders from Madhya Pradesh Jal Nigam, which encompass system integration services, including provisions for laying of optical fiber cable on critical and important routes. Further, having had a strong track record in deploying communication network for various railway projects globally and domestically, HFCL also secured orders worth 80.92 crores from Delhi Metro Rail Corporation. These substantial wins underscore HFCL's sustained momentum and solidifies its position as a trailblazer in advanced communication technology solutions. Our order book now stands at rupees 7,685 crores as of 31st March 2024 as compared to rupees 7,010 crores last year. I must tell you that behind these numbers is relentless effort and work done by the entire team for development of new features and product innovation. We are very structured in our approach to business. The product and sales teams are working closely than ever. We remain incredibly focused on sales and growth of our market share. Further, HFCL Ltd, one of our subsidiary company, has successfully secured various prestigious orders in its wire harness business during financial year 2024 with its focus on automotive, aerospace and defense sector. As you may be aware that this segment is of low capex and high revenue generating segment. We strongly believe that this wire harness business can grow manifold in the years to come. Given that HFCL had received an approval to avail incentive participation in production-linked incentive scheme, the company will start receiving PLI benefits in the current fiscal year on production of telecom and networking products. Friends, let me now brief you on the key performance metrics of the Q4 and the whole year. For the 12 months ended 31st March 2024, the company reported consolidated revenue of 4,465 crores as against 4,743 crores in financial year 2023. EBITDA of rupees 682 crores as against 666 crores in FY 2023. Profit before tax of 454 crores as against 431 crores in FY23. And profit after tax of 338 crores as against 318 crores in FY23. Revenue of Q4 FY24 stood at 1,326 crores as compared to 1,032 crores in Q3 of FY24 and rupees 1,433 crores in Q4 of FY23. EBITDA for quarter stood at 209 crores as compared to 163 crores in Q3 of FY24 and 160 crores in Q3 of FY23. EBITDA margin stand at 15.78% for Q4 in FY24 as compared to 15.83% in Q3 of FY24 and 11.74% in Q4 of FY23. Profit before tax for Q4 of FY24 stood at rupees 149 crores as compared to 108 crores of Q3 of FY24 and 109 crores of Q4 FY23. PAT margin stands at 11.2% in Q4 as compared to 10.45% in Q3 of FY24 and 7.6% in Q4 of FY23. For Q4 of FY24, profit after tax stands at 109 crores as compared to rupees 82 crores in Q3 of FY24 and 79 crores in Q4 FY23. PAT margin stands at 8.25% in Q4 of FY24 as compared to 7.99% in Q3 of FY24 and 5.49% in Q4 of FY23. Segment revenue for telecom products during the quarter stood at rupees 362 crores, that is 27.33% of Q4 revenue, as compared to 364 crores, that is 35.24% of FY23 revenue. FY23-24 has witnessed slight decline in year-to-year revenue due to softening in demand of optical fiber cables. This temporary decline is in line with the worldwide trend. It is attributed to inventory built up with major operators, resulting in an overall reduction in revenue in absolute terms. Our growth is driven by three independent drivers, which all are working together. These are robust investment in research and development, backward integration with capacity expansion, and expanding national and international presence. With these growth engines, we have been able to significantly improve our revenue mix, product mix, geographical presence, and customer mix, ensuring sustainable growth in times to come. We remain confident of opportunities ahead and execution of our long-term strategy. We are confident that OFC demand will be restored in Q2 of financial year 25 onwards in both India and key global markets. Furthermore, we are confident our continued effort in designing and developing innovative and geography-specific optical fiber cables for international markets, along with the introduction of new 5G telecom networking equipment and defense products, will further yield results in coming quarters. These efforts are expected to provide impetus to both revenue growth and profitability, along with the potential of increase in our margin. Our outlook is very bright, and we look forward to a very strong year ahead. Friends, thank you once again for your keen participation. With this, I conclude my opening remarks and open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking the questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parth Mehta, an individual investor. Please go ahead.
Sir, I have a couple of questions. The first one is, this time we have executed services, turnkey services worth some 990 crores. So I wanted you to shed some light on that, as in we have done better on services margins front as compared to products. And is it the way forward, or are we going to, is this a one-off kind?
Look, yes, we have executed 964 crores of services in the current quarter, and margins have also been good. These margins, I cannot give you a definitive answer that this is a trend would continue or there will be different, because this all depends upon contract to contract. Sometimes contracts are there which are of high margin, high profitability. Sometimes they are of lower margin and lower profitability. So there cannot be any definitive answer to this, but yes, we look for reasonable margins to continue in our contracts, and we are not taking contracts which are with a lower margin.
Okay. So, is this anything to do with the orders that we have got from BSNL worth 1,100 odd crores? Is it execution on that front, or?
No. Execution of that order would be in the current year. That execution has not even started significantly.
Okay, that would start in this quarter, June quarter, or it would take some more time?
No, it is starting in the current quarter, in the June quarter.
Okay. And the mix of products and services would remain 70-30 going forward as and when the optic fiber cycle turns favorable to us?
I think, this year there will be a very transformative change.
Okay.
One of the important factors which is going to happen, as I said in my opening remarks, last year the revenue from telecom products was only about 150 crores.
Okay.
This year we are expecting revenue of 2,000 crores from the telecom products. So 150 crores reaching to 2,000.
Is that 2,000 crore ex OFC or?
No, without OFC. That's why I used our telecom products. Now,
Okay.
Now OFC also we are expecting revival of market this year globally and India also. More so globally. And we expect a revenue again more than 2,000 crores. In the current financial year from optical fiber cable business.
Okay.
So, there is a potential of product business reaching to 4,000 crore plus in the current financial year, which would mean that, our revenue would consist of more than 2/3 of the product driven and less than 1/3 of project driven. And this trend is expected to continue in future. If you recall that I have always been saying that our effort is always to develop the product business, not as much the project business. Last year was an aberration because of low demand of fiber optic cable, and new products had not been, sent to market. They were undergoing test trials and all that. With the new telecom products which have been designed by us already in the market now, and also fiber optic cable demand picking up, and both these segments giving a possible revenue of 2,000 crore each in the current year. This would be a very, very transformative change, with almost 70% of revenue coming from product business, which is cable and telecom products. But important point is, first time we would have such a high revenue coming from telecom products.
Okay. So my last question is, have we executed anything from Madhya Pradesh Jal Nigam order that we had received?
A very small portion, probably about 50 crores, around little less than 50 crores.
Okay. And the BSNL order that we have, 1,100 crore order, that is mix of products and services, right?
Yes, it's a mix of products and services.
Okay. Thank you so much, sir. That's all from me.
Thank you.
Thank you. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good evening, sir. Thank you so much for taking my questions. Sir, my first question regarding, we have seen a lot of strong tower additions by one of tower infra players, majorly led by rural expansion and 5G rollout. And so what kind of demand and business opportunities we have in this tower rollout, and please share what kind of business share we have from telecom players like Jio, Airtel, Vodafone and BSNL?
Look, tower rollout companies, like Indus or these companies, do not represent any major demand opportunity for us. because tower is more, construction of towers, which we don't do so much, and also not so much of fiber optic cable and all that. So that does not represent